What if I told you that while the world panics during a market crash, while investors are selling off their portfolios in fear, you could sit back, stay calm, and actually build wealth faster than ever? This isn't a fantasy. It's not a motivational speech. This is the reality of those who are financially unshakable. In this video, we're breaking down Tony Robbins' best-selling book, Unshakeable, a no-nonsense, battle-tested guide to achieving financial freedom no matter what's happening in the market. Tony spent years interviewing over 50 of the world's top investors and financial experts, people like Warren Buffett, Ray Dalio, John Bogle, and boiled down their strategies into a playbook for regular investors like you and me. So if you've ever felt overwhelmed by financial news, confused about investing, or scared of losing money in the market, this video will give you clarity, control, and confidence. Welcome to Invested Intellect, where smart minds grow smarter. Section 1. What does it mean to be unshakable? To be unshakable is to remain calm and confident even during times of extreme market volatility. It's about understanding how markets work, not being ruled by fear, and following proven strategies that work in every kind of economy. Most people panic when the market drops. They sell at the bottom and then wait until the market rises again to buy, which is the worst possible strategy. Tony emphasizes that volatility is not a risk. It's a price you pay for long-term wealth. Smart investors use downturns as opportunities. Unshakable investors don't react emotionally. They act based on knowledge and preparation. You don't need to be rich to become unshakable. You just need the right mindset and a plan that works regardless of market conditions. Section 2. The Power of Compounding. One of the core messages in the book is the unbelievable power of compounding. Tony explains that the sooner you start investing, the more your money multiplies over time, even if you invest small amounts. Let's say a 20-year-old invests $300 a month into a simple index fund, earning an average of 8% annually. By the time they're 65, they'll have over $1 million. But if they wait until they're 30 to start investing the same amount, they'll only have around half that. The earlier you start, the more time your money has to grow, and the less you actually need to invest overall. It's not timing the market that makes you wealthy. It's time in the market. That's why Tony urges everyone, especially young people, to start now, even with small amounts. Let compounding work in your favor. Section 3. The truth about market corrections. Corrections and crashes are a natural part of the market cycle. A correction is when the market drops at least 10% from its recent high, and a bear market is a drop of 20% or more. The truth is, these events happen regularly. Historically, the market has a correction about once every year. But here's what most people don't realize. Every single bear market in history has eventually been followed by a bull market. And every correction has been temporary. Tony points out that from 1900 to today, the market has had dozens of crashes and corrections. Yet over the long term, it has always recovered and continued to grow. This is why the greatest danger isn't the market crash, it's the emotional reaction. People panic, sell their investments, and lock in their losses. Tony's advice? Prepare mentally in advance. Know that downturns are normal. And instead of fearing them, see them as a buying opportunity. Section 4. How fees destroy your wealth. One of the most eye-opening parts of Unshakeable is Tony's focus on investment fees. Most people don't realize how much they're paying, or how much it costs them over time. Let's say two investors each put $100,000 into the market for 30 years, earning 7% annually. One pays just 0.25% in fees, and the other pays 2%. The first investor ends up with around $760,000. The second? Only about $430,000. That's a difference of over $300,000 lost to fees. Tony shows that many actively managed mutual funds charge 1% to 2% in fees, and they often underperform the market. That's why he recommends low-cost index funds and ETFs, which have fees as low as 0.03%. Every fraction of a percent you save on fees compounds into serious money over time. Ask yourself, are you paying for performance, or are you just losing money to hidden costs? Section 5. Asset allocation is everything. No matter how smart you are, or how good your investment picks seem, if your asset allocation is wrong, you're in trouble. Asset allocation means how you divide your money among different asset classes, like stocks, bonds, cash, real estate, and commodities. Tony stresses that your specific asset allocation is more important than any individual investment you make. He shares a strategy inspired by billionaire Ray Dalio called the All Seasons Portfolio, designed to perform in all types of markets. In its simplest form, the idea is to diversify not just across different companies or sectors, but across economic environments: inflation, deflation, growth, and recession. This approach smooths out returns and protects you from major losses. Diversification is your best defense against uncertainty. It won't make you rich overnight, but it will keep you from going broke. Section 6. The Psychology of Wealth. According to Tony Robbins, success in investing is 80% psychology and only 20% strategy. It doesn't matter how great your plan is if you don't have the emotional strength to stick with it during tough times. Many people self-sabotage their financial future because of fear, doubt, and impatience. They tell themselves stories like, "I'm not good with money. I'll invest when I have more. It's too risky." These are not facts. They're limiting beliefs. To become unshakable, you must change your internal story. You must believe the market rewards discipline. Volatility is opportunity. Wealth is a long-term game. Train yourself to feel calm while others panic. Focus on what you can control. Tune out the noise. Follow your plan. Mindset matters more than math. That's why millionaires stay rich even during crashes, and why lottery winners often go broke. Section 7. Work with a fiduciary, not a salesman. Many people think they're getting expert advice, but they're actually getting sales pitches. Tony warns that the majority of financial advisors are not required to act in your best interest. They get paid commissions for selling certain products, even if those products aren't right for you. That's why it's critical to work with a fiduciary advisor, someone who is legally required to put your interests first. Here's how to protect yourself. Ask your advisor. 1. Are you a fiduciary? 2. How do you get paid? 3. Do you receive commissions or incentives? If they can't give a straight answer, walk away. The wrong advice can cost you years of growth and tens of thousands of dollars. Good advice, on the other hand, can make you financially free. Final section, Your Financial Freedom Playbook. Tony closes Unshakeable with a clear, step-by-step roadmap to financial freedom. Let's break it down. Step 1. Pay yourself first. Save a portion of your income automatically, no excuses. Start with 10%, then grow it. Automate your savings so you never see the money in your checking account. Step 2. Invest in low-cost, diversified index funds. Avoid chasing hot stocks or timing the market. Buy the whole market at a low fee and stay the course. Step 3. Rebalance your portfolio. Every year, adjust your allocation back to your target percentages. This forces you to buy low and sell high, automatically. Step 4. Anticipate corrections and welcome them. Train your brain to see downturns as opportunities to buy more. This is how wealth is built. Step 5. Focus on what you can control. You can't control the economy. You can't control interest rates. But you can control your savings rate, your fees, and your emotions. Step 6. Stay in the game. The only way to lose long-term in the market is to get scared and sell. Stay invested. Stay steady. The market rewards patience. This playbook has helped millions of people move from fear to confidence, from scarcity to abundance. You don't need to be rich to get started, but if you follow these steps, you will become wealthy over time. You now have the blueprint to become unshakable, mentally and financially. If this video helped you shift your mindset or understand investing better, do one thing right now. Hit the like button, subscribe to Invested Intellect, and leave a comment below. What's one action you're going to take this week toward your financial freedom? And if you want us to break down Tony's other book, Money Master the Game, just let us know in the comments. Thanks for watching. Stay smart, stay steady, stay invested.